Hi, welcome to the Bullish Bears YouTube channel. I'm Jeremy, and today I'm going to show you a little trick on how to spot reversals like a pro on TradingView. I'm also going to show you how to target reversion trades as a means of moving your stop up to catch potentially the entire reversion. So first we've got to identify a reversal. So here we have a classic kind of textbook double bottom. The second low should be slightly lower than the first low after a decline in the trend, and it should also find that it crosses above the mean difference between the high and the second low. And in this case, you had a buy signal right here as price broke out above the mean between the high and low of that pattern. And essentially, it tested that mean for support. So your better entry was actually after the test, right in this candle here. And first target for adjusting your trailing stop is going to be the return to that previous high. And you're not going to move it up to that high. You're going to move it up just a little bit from your entry because, as you can see, this wick here, liquidity quickly took it out right back to support, flushed everybody out of the trade, and then continued to trend on. Now, to find a target. Finding a target is really simple, and all you really need is a box. So if you draw a box on the trend here, you get the low mostly to the recent low. I had adjust it, the high, and your first target for a breakout of this reversal is going to most likely be a reversion trade, about half of the previous trend back. Whatever news caused this to come down, typically shareholders and investors are going to kind of digest that news, and usually whatever the news may be, unless it's something catastrophic for the company, will tend to give back about half of that rapid trend, whether it's an uptrend or a downtrend. So identifying half is ideal, and in this case we have a target right here at about 768 using UEC as an example. And we can go and draw a pivot line there to kind of mark that. I usually just draw a box and leave it at that, but it's going to be close enough to simply just use a pivot in your eyeballs. You don't necessarily have to draw the box. Two things to notice. There was an accumulation previous in this trend before it dipped down and hit the high here. That's going to be about the center most of the time when you find the center of the high-low extreme anyway. So as price is moving up, if you got long on that entry, you're going to be moving your stop up pretty much in repeat of every one of these trend bars in this. So you'll move it up as you cross different thresholds. And if you notice, there's always going to be wicks sticking out of these bearish bars in this type of scenario, and you're going to be able to use those as a sense of understanding where liquidity is likely to be. If you wanted to, you can make this a little more complex and draw subsequent liquidity zones based on those wicks, and just know that your stop should be about that same width as you're moving it up in the trend. So if you're looking to be taken out of the trade for a profit rather than a loss, your stop is no longer called a stop loss, it's called a trailing stop. And you move it up manually, ideally, so that you can avoid being taken out by something like this, where you get a quick liquidity grab as the price is beginning to trend. Notice how the wicks on top are getting shorter and shorter. The trend is pretty well established here, and we're likely going to see some reaction at this point, and probably an extension after that would reach to about a 50% retracement or half back or reversion trade, whatever you want to call it. As I said before, you don't need to care what you call it. All you need to know is when the song comes on, you better know the dance. Beyond that, if things accelerate and price starts to beat the previous wick in this previous accumulation area here, you can map that out as well and simply draw another liquidity zone out of that. Make sure you can notice them on your chart. And if you look here, you can see there was a range trade within that previous bullish trend. So as things are progressing, these become your new targets for where you would move your stop up to. Typically in a move this size, you'll see relative relation to what we call the 86.6 fib level, which is typically going to be most of that previous trend, but the reasonable time to take profit on a trade is typically within that 86.6 time frame. And you're looking at about 818 to 825 for that. That's where you kind of switch off. If you're being greedy beyond half, that's where you kind of relinquish some of that greed and trade it for reasonability, because at this point you're kind of pushing it. Always look further back than you are trading. So you can see this is just part of a big broadening pattern here. So these targets are likely to be relatively easy to hit with price movement in this range. And if you look back even further, well, we're kind of exploring new highs, or all-time new highs in this case, if you look back far enough, with an exception. Way back in the day, in the hype wave of the market structure of things, you had a really tall reach here where pretty much everybody was chasing this on up. There will be bag holders here. So if we do break out above this previous high in this trend, we will likely find some sellers just above it. Just remember, there's always somebody holding the bag, and there's always somebody willing to take profit and or cut losses at those levels. So they kind of act like magnets in the future when you see things like that have happened in the past. So today we can see a little bit of buying power coming into this, and we're starting to see the structure set up for an extension above this reversal. And as we cruise through the other time frames, we can see that things are all kind of pointing towards a reversion trade at least, and possibly revisiting the previous highs as an outcome if it melts through that mid zone. So this is how you spot a reversal like a pro and plan your trade like a pro, and moving that stop up with you as time goes by. If things get suddenly volatile, you get taken out for a gain rather than a loss, and you can always get back in the trend on a pullback too. I'll talk about pullbacks and how to trade them in a later video, but for now this one is going to be the easy button trades that I like to look for, is reversion trades. They are a dime a dozen, and probably one of the most common trades that you can make successfully just by learning how to spot these reversals and plot those targets out like a pro. Thanks again for joining me. We'll see you in the next video.